Lots of people watching this channel will own Bitcoin, and some of you may even own the Bitcoin spot ETFs, such as IBIT or GBTC. In this video, I'm going to break down the differences between owning actual Bitcoin versus owning spot Bitcoin ETFs, and go through the pros and cons of each. So what is the difference? So for those who don't know, a Bitcoin spot ETF is a stock-like product that gives you exposure to the price of Bitcoin without you actually holding any Bitcoin yourself. You buy the ETF through your broker, just like any other ETF. In contrast, owning real Bitcoin means you directly control the asset, whether it's stored in a wallet or held on a crypto exchange. Now, before we get stuck in, it's worth mentioning that nothing in this video is financial advice, and if you want financial advice, you should seek a suitably licensed professional. So what are the pros of buying the Bitcoin spot ETF? Number one, it's easy. You don't have to worry about exchange wallets, hardware wallets, seed phrases, or private keys. You literally just buy the shares, and it's like buying an S&P 500 ETF like SPY or VOO, which for a lot of people is just easier. And in addition to this, if you choose to self-custody your wallet and lose your private keys, it's game over. For those who don't know, a private key is a long string of letters and numbers used to access a wallet. So the number two reason of owning the Bitcoin spot ETFs is that they are more regulated and potentially safer. Many of these ETFs are offered by major global asset managers with strong reputations. That's a big contrast to some crypto exchanges registered in offshore jurisdictions that have only been around a few years. And if you're in the UK and your broker goes under, you might be covered by the FSCS, the Financial Services Compensation Scheme, for up to £85,000. Assuming the broker was FCA regulated, but we'll come on to this more later because it's not so simple in the UK. In the US, you might be covered by the SIPC, which protects up to $500,000 in securities, including ETFs. Comparing that to a crypto exchange like FTX that went bust a couple of years back, you're just another creditor with no guarantee of getting anything back. So the third benefit of owning the Bitcoin spot ETFs is that there may be tax advantages. Depending on where you live, ETFs might be eligible for tax-advantaged accounts like ISAs, IRAs, or pensions, which can make handling capital gains more efficient than holding actual Bitcoin. So the number four benefit is that the ETFs are regulated and transparent. Bitcoin spot ETFs are regulated by financial authorities, which provide an extra layer of security and also add peace of mind. Because regulators set rules to protect investors, such as requiring full transparency about what the ETF holds, ensuring the fund actually owns the Bitcoin it claims to, and monitoring how the ETF is run. For example, monitoring fair pricing, secure custody, etc., etc. So what are the cons of buying a Bitcoin ETF? Number one, ETFs come with management fees that will eat into your returns over time, and these will vary by each ETF. Most ETFs charge around 0.2% to 1.5% annually. The number two reason is that ETFs can only be traded during market hours, whereas Bitcoin actually trades 24/7. And as we know, Bitcoin is a volatile asset. So if the asset moves massively over a weekend, you will have to wait until the market opens before being able to sell. So the number three reason is that you don't own actual Bitcoin, just some shares that track its price. Some places around the world are very Bitcoin friendly, such as Dubai and Madeira, and you can purchase items with Bitcoin. So hypothetically, say your Bitcoin went up in value, you could transfer it to someone to buy a product. But if you buy the ETF, you would then have to sell it back to cash, which may be taxable before being able to purchase the item. Holding Bitcoin directly gives you total control. So the number four con of the ETFs is that they may have tracking errors. ETFs are designed to follow the price of Bitcoin, but there can be tracking errors or discounts to net asset value, meaning the ETF price might not perfectly reflect Bitcoin's price. So earlier I mentioned there's a catch if you're in the UK, and at the time of recording, which is May 2025, you can't buy US ETFs like IBIT or GBTC due to EU and UK rules requiring ETFs to be UCITS compliant. Right now, there are no UCITS compliant Bitcoin ETFs, so your only option as a retail investor in the UK or EU is to buy a CFD, which is a contract for difference version of a US ETF. That means you don't actually own the ETF, you're just making an agreement with a broker to mirror its price. Professional investors may be able to access ETPs, which are exchange traded products, but again, that's not available to retail investors. This could change at any point, and I'm sure we'll eventually see UCITS compliant Bitcoin ETFs, but for now it's limited. So as I mentioned earlier, nothing in this video is financial advice, and you should always do your own research because what is right for me likely isn't right for you. So which would I personally choose? If I was a person who valued simplicity, regulation, and investor protection, I'd personally pick the Bitcoin spot ETFs. If I cared more about sovereignty, decentralization, full 24/7 control over my money, or if I lived somewhere that only offered CFD versions of the Bitcoin spot ETFs, then I'd personally hold Bitcoin directly, and this is the reason why I do. So let us know in the comments, are you holding Bitcoin, Bitcoin ETFs, or both of these, or perhaps neither of these? And let us know your reasons why. If you got any value from this video, then please smash the like button and subscribe as I upload new finance and crypto related content every week. And if you're looking to buy real Bitcoin on an exchange, then check out the crypto tutorials linked in the description below. Some exchanges even come with deposit bonuses. Or if you want to buy Bitcoin without dealing with wallets, then eToro is a great hybrid option. It simplifies the process by holding the crypto in your portfolio. And if you're in the US and looking to buy spot Bitcoin ETFs, eToro also has you covered for that too. So check out these two videos here. They'll walk you through the next steps depending on which route you want to take. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.